Alright, so this is how I was able to catch this current buy on gold. So this is the before of the trade. So I'm going to give you a step-by-step analysis on how I was able to catch this gold buy. So you also have to pay a careful attention and learn. So let me go to trading view. Alright, let me go to trading view. Alright, so this is trading view and this is a 1 hour time frame. Let me show you the trade. Oh, this is daily time frame, sorry. So this is the trade on 1 hour time frame. Alright, so I'm going to give you a step-by-step analysis on how I was able to catch this trade. So the first thing I do was to go to my higher time frame and know the direction of the market so that I will know what I'm doing. Alright, so if you have not watched the video on directional bias, go to my channel, check the last video on directional bias. Please, I beg you watch that video. It's very important. I know that some of you will not appreciate the value of what you are getting from this channel. You will not appreciate it because it's free. Alright, so since it's free, most of you will not appreciate the value until some of you have to pay for the knowledge before you value some of the things that are benefiting from this channel. Even some channels, some mentors that are collecting $200, $300, $500, they are not giving like the knowledge that you are getting from this channel. Most of the students say they cannot even have half of the knowledge, but because I'm giving it free, giving access to all the videos and all the knowledge free, most of you might not value it. But I know that there is one person out there that don't have money to pay for mentorship that this channel is going to help, and this video is going to help. That's why I keep doing this. Alright, so, and most of you say you even watch the video even to like or to even comment or even to say thank you, you will never do it. Please, it doesn't make any sense. Please like, comment, you can share the video with your colleague as well. Alright, so the first thing I do is to go to my daily time frame or 4 hours time frame to know the directional bias of the market. So I switch to, let me switch first of all to daily time frame. Okay, so this is daily time frame. So this is daily time frame, and from daily time frame you see that market was initially in a downtrend, but it has changed direction. Market was initially in a downtrend. You can see market was in a downtrend, trending down, and then this I think this breaker block here is what caused this reversal. So this breaker block here, yes, this breaker block here is where market reacted to. So market reacted to this breaker block, and then we are supposed to go to our lower time frame and then look for reversal concept, which is market structure shift. So you can check your 4 hours as well and see where the market, what causes the retracement. Alright, let me delete this. So you can see, if you come to your 4 hours time frame, you see where that it's more clear that market reacted from this zone. Alright, market reacted from this zone. So it's this zone that caused this reversal. Alright, so anytime a market is trending down, you have to go to your higher time frame, that your daily time frame or your 4 hour time frame, and mark all the zones that can possibly cause a reversal. So you have to mark all the the zones like your breaker block and your other block that can possibly cause reversal. Whenever market is trending, whether it's trending up, it's trending down, there is an impulsive move and there is a correctional move. All right, this is not a class for directional buyers. So if you watched that video, if you have already watched that video, you understand what I'm saying. But if you haven't watched it, if you pay attention to this, to what I'm explaining, you can still get it. Or you comment, please make a video on directional buyers. I'm going to make another video and explain that. But by the way, without that, you can still get what I'm explaining. So this is 4 hour time frame. Market is reacting from this zone, so I don't want to make the video too long so that you can be able to comprehend. So I now switch to my lower time frame, my either 1 hour or 30 minutes time frame. So I switch to 1 hour time frame. I check the zone where I mark the zone. All right, so this is where I mark the zone. And if you observe, before market reacted from the POI on a higher time frame, daily time frame or 4 hours time frame, you see that market was trending down. All right, market was trending down, creating a series of lower low, lower high, a lower low, a lower high, a lower low, a lower high, a lower low, and then a lower high. So when market gets to this level, market break this zone, market break above this zone, creating a market structure shift, and then this first pullback is where the inducement occur. This is the first pullback, inducement, liquidity. So inducement occur here, and then market trigger this POI here. So market trigger this POI here. All right. So market triggered this POI here, and then market started trending up. So this is not what I'm here to explain. I just want you to know that, okay, from here we know that market is trending up. Even if you check your 4 hour time frame, from this point it's possible to see market structure shift. It's possible to see market structure shift from here. Market reacted. All right, so this is this 4 hours time frame. Market was trending and creating a series of lower low, lower high, a lower low, a lower high, a lower low, a lower high. And when market break above this last low, it create what we call market structure shift, and then give us inducement liquidity. You can mark this place as our inducement because it's higher time frame. And then the next POI is this. So you cover the two candle that causes this breaker block. All right, so this is where it's supposed to be. So this bullish candlestick and this bearish candlestick is what causes this breaker block. So this is how your trade is supposed to look like. So market structure shift has occurred in this direction. So whenever we are trading now, because market structure shift, you always trade it once. You trade market structure shift once, and then other entry should be a continuation entry. So now what I'll be looking for in my 1 hour 30 minutes time frame is continuation entry. All right, so I'll switch to my 1 hour time frame and look for either double break or structure or multiple break or structure. There are other trades I have took here already, but let me explain the current trade that this video is meant for. All right, so this is it. Market is trending up. We know that okay, market structure shift has already occurred, and the market is trending up. We know that okay, reversal concept, market structure shift is meant for only a reversal pattern alone. And after that reversal, what we should start trading with is a multiple break of structure or double break of structure. All right, so now when market gets to this point, if you observe very well, when market gets to this point, market take out this high here, market take out this high here, and then this high as well, market take out this high as well. So when market take out this high with this candlestick here, with this candlestick here, is this candlestick that causes this double reconstruction or multiple reconstruction. Yeah, this is multiple reconstruction because this zone was also taken out. All right, this zone was also taken out. So the market now created an inducement. Market creates inducement after taking out that level. Market created an inducement here, and then our possible point of interest is this is either this our possible point of interest is this breaker block here, this breaker block here, this breaker block here, and then there is another block here. All right, so since we have two ways, two possible since we have two ways we can take our point of interest, which is order block and breaker block. We have two ways of taking a proper point of interest, either a breaker block or an order block. And when it comes to a breaker block, we have 4 rules in taking a proper point of interest. But in this trade, what I used in entering this trade was an order block. All right, another block is made up of a bullish order block, which is for buy, is made up of a bearish candle and a bullish candle that engulf it. All right, so if you look here, you see a bearish candle and a bullish candle that engulfs it. All right, so I'm trying as much as possible to make the video short. That's why I'm rushing. So this is it. When you have a bearish candle and then a bullish candle that engulfs it, this is what this is what another block means. This is what another block means. So a breaker block is a phase zone in the market. When market trend to this point, market was supposed to sell from this zone, but this candlestick is what causes, it will break this zone here, break this zone here, and then this zone as well. So create a first pullback, create this inducement here, and then this other block is where I take this my trade. So whenever I see another block, a POI in the setup, I make use of the other block to enter the market instead of the breaker block. But in a scenario where there is no breaker block, I use where there is no other block, I use breaker block, and I follow the rules in taking a proper point of interest using breaker block. And number 1 rule say there must be a market structure shift or double break of structure. Then number 2 say there must be an inducement. Then number 3 says the point of interest must be unmitigated. As market is creating an inducement, it must not touch the level. Even here, if you see that when market created this inducement, you see that this level was mitigated, this POI was also mitigated, and then it was left with this POI. So even if you follow the rules in taking a proper point of interest and use a breaker block to enter this trade, you will not still hit stop loss. All right. So but I use another block to enter this trade. So this is it. So this is where I mark the trade, and then market retrace triggered my POI, and then it continue a buy until I target this high in the market. So I target this high using trend and liquidity. All right. So these are to take your profit too. So if you want to take your profit, you can either target the last high in the market or use trendline liquidity to take your profit. So when I draw my trend line, I know that okay, since market was trending down, there is money that have been accumulated. There is a trend line liquidity. There is a liquidity that have been accumulated at the opposite side of this trend. So I know that definitely market is going to trend up to clear out this liquidity that was accumulated on this opposite side of the market. So that's why I have to set my TP slightly above it, because this is an impulsive move. If happen that this is a downtrend, if happen that this is a correctional move, I will keep my profit, take profit here. But since I know that this is an impulsive move, and by logic, you know that the market is trending up, is creating a higher low. The market is trending up. Whenever market is trending up, it's creating a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So by logic, you know that okay, as market create this higher low, higher high, you know that the last the current high is always higher than the previous one. The current high is always higher than the previous one. So I know that okay, that if I am taking my buy here, I know that market is going to go above this current high. That is why I place my take profit slightly above this level here. And what did market do? Market come here and clear it. So this is how I was able to take the gold trade. Okay, so this is what I'm going to do. I'm going to start over again and explain it, and this time around I'm going to be very fast about it. So just pay attention. Please, I will advise that you stick to this channel. There is no point of moving from one channel to another. If you just stick to this channel, take your time and watch the videos on this channel one after the other, you will not have any challenge. Any challenge about trading again. You will not. The only challenge that you are going to have is how you can be able to overcome yourself. It is how you can be able to control your emotion. That one is personal. There's something that you have to do, something that you have to determine to do on your own. Alright? So it's something that you yourself have to determine to do. It's not something that anybody is going to. It's something that you must do. So you have to take your time and digest all the videos that you see on this channel. Just take your time and digest them. It's going to help you a lot. It's going to help you a whole lot. So let me rush and explain it again. All right, so we see that, okay, on a 1 hour time frame, you see that market is trending up. And from even your, if you go to higher time frame as well, you discover that market is trending up. It's very easy to identify the trend of the market. If you draw your trend line, you will know if market is trending up or is trending down. So okay, now from our 1 hour time frame, we draw our trend line, you see that market is trending up. All right, market is trending up. If you switch to your 4 hour time frame, you see that the buyers of the market is in an uptrend. Market is in an uptrend currently. You switch to your daily. The overall direction of the market is bullish. So what do we do? Since market have changed direction from the 4 hours time frame to a bullish movement. Initially market was trending down. Market was in a bearish movement. Market was trending down. And from the POI that we mark from our daily time frame, market started reacting from here, create a market structure shift. Market was trending down, and we know that indication of a downtrend is lower low, a lower high, a lower low, a lower high, a lower low, a lower high. So when market change from creating a lower low, lower high to a higher low, a higher high, when market change from creating a lower low, a lower high, a lower low, a lower high to creating a higher low, higher high, higher low, higher low, higher high, higher low, higher high, higher low, higher high, that means the market has completely changed to a different thing entirely, which is a bullish trend. All right, or an uptrend. So market was trending down, creating a series of lower low, lower high, a lower low, lower high, and then it break above this level. When it break above this level, it create a market structure shift, and then this is a pullback. You can mark this as a pullback, or you can still mark this as a pullback. This is your inducement. So when market create this inducement, market trigger this POI here. All right. So market trigger this POI here. So immediately market trigger this POI, we know that, okay, market is now in an uptrend. So if you draw your trend line based on where you're supposed to take your profit, you see that there is a trend line liquidity here. So we are buying until market clear this trend line liquidity. So if you take your buy from here, that is where you are supposed to. If you take your buy from here, this is 4 hour time frame, but your entry is supposed to be 1 hour, so I'm just using 4 hour to explain. So if you take your buy from here, for instance, if you take your buy from here, you are supposed to buy until market clear out this trend line liquidity on your 4 hour time frame, until market clear out this zone. So you can see that market has not yet cleared out this zone in the market. So now reversal concept is used only once. Then the other ones is your continuation concept, which is double reconstruction or multiple reconstruction. So since we have gotten our market structure shift, we have gotten our reversal concept now. Now market is trending up. So what we now use to join the market is continuation concept. That is why we have to go to 1 hour. 1 hour or 30 minutes and look for continuation. Alright, so there are other continuation trades that I took, but let me explain the current one that is meant for this class. Okay, so this is it. So if you are trading continuation, you will just be observing and wait for double break of structure or multiple break of structure. So once I was waiting and then I see a double break of structure here. When market take out this high here, which is the same thing here, then it take out this high again, and then this high, which is also in the same direction with this. Yes, it take out this high as well. So after that, market created an inducement. After taking out this, it created an inducement. This candlestick here is what our inducement is. This is our inducement. This is the first value put back after the double break of structure, the multiple break of structure. We call it break more than 2 zones here. So our POI now is this breaker here, this breaker here, this breaker here, and then this other block that cause this multiple break of structure. So now we have two POI that we normally use, either breaker block or another block. In this setup, we have other block here, so we make use of the other block. So that is why I use other block here to take this trade. So this is the other block. Other block, a bullish order block is a kind of order block that have a bearish candle and a bullish candle that engulfs it. Alright, so I have another block here, so I may use of this other block here to enter this trade. So this I was able to take this buy. I believe that this video has helped you to understand some of the stuff in the market. Please like and subscribe to the channel. Check other videos that are in the channel. They are very, very, very important, and I've explained why I get my TP here. I've already explained that. The reason why my TP was that because I use trend and liquidity, and by logic, since market is in an impulsive move, it's trending up, that's why I keep it above this level. It's slightly above this level because by logic, by normal logic, since market is trending up, creating a higher high, higher low, higher high, higher low, you know that the current high is supposed to be higher than the previous one. So since this is the last high in the market, the one that is coming is supposed to be slightly higher than the previous one. That's why I place it slightly above, and this is what happened. Thank you very much. Please subscribe.